And without money, my dad used to say, no money, no funny. So we always start with a conversation about money. And last Saturday, Darren Farwell, as usual, continued our education on how to retire on our own terms and invest tax efficiently. So good morning, Darren.
Good morning, Marilyn.
Last Saturday, you shared a happy story that taught us about the benefits of keeping things simple, KISS, and encouraged us to make sure that we know where all our estate assets are located. And you gave a very good example of that, and I'm going to encourage people to go back to the show and listen to the segment. I also have posted it on Facebook under Marilyn Wetston Inc. So if anyone wants to join us on Facebook, they can like that site. And basically, to help us keep it simple, you offered an estate asset inventory where you could list everything in one place. So thank you for that. And before we start, are we still offering that this week?
Yes, if anybody would like it, the asset record keeper, so it's a good way of keeping record of all of your financial assets in one place, financial assets, real estate assets, insurance, feel free to call us and we'll send you a copy.
So I'm going to give out your number, 416-863-7501. And do you have another happy story for us today?
Well, yes, I do. In fact, your father would be quite happy to hear that. You know, I guess there's two ways of having more money, as save more or pay less in taxes, so you keep more in your own pocket.
Well, both of those are good.
Both of them are good. And today I have a story about reducing estate taxes. It's a happy story about Carmen, and it highlights the principle we talk about so often in this show. You don't know what you don't know. Carmen, a new client of mine, well, she didn't know she could save over $100,000 in probate fees on her estate. Now she knows she can. To get started, though, I need to provide some technical background. There are 3 taxes applicable at death: tax on income, tax on the sale, disposition, and deemed disposition of capital assets like stocks, mutual funds, and real estate, and 3, estate administration tax, commonly referred to as probate, because it arises in the probate of submitting a will to probate. Our happy story today involves, first and foremost, saving a lot of money on probate fees. But before we get to that, the joy of reducing taxes, let's dig a little deeper in what probate is. The probate process involves, number 1, registering the deceased will with the Ontario Supreme Court. Number 2, applying for a certificate of appointment of the estate trustee, also known as the executor. And number 3, payment of the estate administration tax by the estate, also known as the probate fee. Some smart public relations person, I guess, decided they would call it probate fee instead of what it really is, a tax, but I digress. Note, probate fees do vary province by province, and Ontario charges one of the highest. It can be tens or hundreds of thousands of dollars for middle and upper income Canadians. But here's the good news. Not all wills are subject to the probate process, and where no probate is required, no estate administration tax is paid. Here are some of the common exceptions. Number 1, probate fees won't be paid when assets are owned jointly by the deceased and another person, like when 2 people own a residence together. Number 2, when an asset has a named beneficiary, like an insurance policy or an RSP or a RIF. And number 3, and this is Carmen's magic bullet, when the transfer of a privately held corporation on death of a shareholder are governed by the terms of a shareholder's agreement and not by the shareholder's will. There are even some cases when the probate tax can be avoided even without a shareholder's agreement, but that's a more detailed story, and if anybody wants more on that, we can talk later. The bottom line is that if you have a separate will for your company, a separate corporate will, separate from your personal will, you can avoid the estate administration probate fee on those corporate assets. Carmen was not using this multiple will strategy. I suggested she speak with an estate lawyer about doing so, and here's what she stands to save. Using her multiple will strategy, Carmen placed approximately $2 million of her assets under her primary will. This did not include, of course, her house, which is jointly owned with her mother, or her insurance policy, which has her son as her beneficiary. She has now created a secondary will for her privately owned company with a current value of about $8 million. On her death, only her primary will be submitted to probate. That would be a cost at approximately 1.5% of $30,000 versus a probate fee of approximately $150,000 without a separate will for her corporation. So her potential benefit is $125,000 saved by her estate. The cost for her to do this is about $5,500 for redoing her wills. Voila, Carmen was quite happy. Now, look, I'm not pretending this is rocket science. No doubt plenty of listeners will be thinking, well, Darren, that's pretty obvious. Everyone knows if you own a private company of any significant value, you should have multiple wills. And if you don't know, your accountant or your lawyer or your wealth manager or your friend should be telling you. And yes, that's true. But the fact is, Carmen didn't know. She knows a lot of other really good stuff, like how to grow a small manufacturing business from zero revenue to a company with a 7-digit value. But, and I've seen it before, when we sit down with business owners to look through all of the things that they need to think about or could consider to help their own personal wealth, there are often things that are missed. And our roadmap process has a dedicated checklist to make sure that all of these issues at least get considered. And then what we do is we consider them all and then decide which ones are a priority to tackle immediately. And for Carmen, it was the simple act of getting multiple wills. So Marilyn, we do have a booklet that we can hand out. It's called the 10 Tips for Estate Planning, and it does cover some simple but powerful strategies to reduce taxes on your estate.
Well, you said that most people would know about multiple will strategy. I've never heard it before. You didn't hear my jaw drop because it didn't hit the table. However, I think that all of us sort of deal in our lives specialties. So if we're focused a certain way, we don't have the overview that you and the Farwell Group have. So I appreciate your sharing this information, and I believe that people listening to us, a lot of them don't know about multiple will strategy. So this booklet, 10 Tips for Estate Planning, and will you sit down with someone who wants to know more about multiple will strategy and get an overview of their whole portfolio?
Yes, we have, there are plenty of ideas that we can bring to the table when people are talking about their estate plan and how to leave more money for the beneficiaries, those causes and people they care about. We're quite happy to do that. You can call my number. I won't be going to the office today. We have a garage sale, but give a call and leave a phone number or an email address, and we'll be glad to follow up.
Well, it's not about saving nickels, dimes, and quarters. You don't need a piggy bank. This saves what it sounds like can be hundreds of thousands of dollars. So if you're in a position where you want to reduce your tax and reduce what the government gets from probate, because eventually we all go, so multiple will strategy and 10 tips for estate planning book and a fount of knowledge from Darren Farwell and the Farwell Group. All you have to do is call 416-863-7501. You don't know what you don't know, and each expert and specialist knows probably a lot more than you know about any one given subject. So get the information you need and take action based on that information with no regrets. The phone number again, Darren Farwell, the Farwell Group, 416-863-7501. Have a good garage sale, Darren, and thank you for that information, because the idea of probate will fees and multiple will strategy is something totally foreign to my little brain. Thank you.
You're welcome, Marilyn.